Hello, everyone. Good morning to you all. I'm so grateful and thankful to be with you here this morning. All right, let's do it as we normally do. So, if you can see my screen and you can hear my voice clearly, I would appreciate that you type in hi in the comment section, as this will help me to confirm that we are actually good to go. And if there are any issues, that is, if you can hear me clearly, probably there are distortions, let me know so that I can do the appropriate adjustment so that we can have a better experience. So I would like to see some feedbacks. If you can see my screen, you can hear my voice, please type in hi in the comment section. Okay, let's see what we have here. I can see 996. Good morning. Thank you very much. I saw Bonsi. All right, thank you. 959. So your emojis. Mara Sig. Okay, Raven Crow. All right. Okay, thank you, Carrie. Good morning to you. Thank you very, very much. Okay, so let's take this as a positive feedback that we are good to go this morning. And on this note, I welcome everyone to another exciting episode of our weekly price action based technical analysis. I'm really excited to have you here. And into this session, we will be delving into a detailed technical analysis of the gold spot, USD JPY, GBPUSD, EURUSD, and the USTech100, focusing on a comprehensive price action perspective. And together we are going to be exploring the fundamental factors, recent market movements, and chart patterns to uncover valuable insights that could greatly influence our trading decision for the New York session. So let's get ready for an insightful session. And on that note, let's dive right into the business for today. And before I go into the details, please, I would like to appreciate every single one of you who are joining us for the first time. You are highly welcome. And what we simply do here is to gather here as a community ahead of the New York session so that we can actually position ourselves in such a way that we can catch any potential opportunity during the New York session. So we do this on a daily basis, 10 a.m. UTC, 11 a.m. West African time. And trust me, with time you get to understand how this works. So stay tuned in, be with us through the session. Join us every day, and by with time you get to understand how this works, and you will be able to use the information you gather here to make your independent decision on your account. So on that note, let's dive right into the business for today. And you all know how we do it. The first thing we want to be doing is to kickstart the day by checking the economic calendar so that we can have an idea into what majority in the market is looking forward to. And one thing that is peculiar in the last 24-48 hours is that trading activity has been range bound in the first half of the week, as there is quite a level of uncertainty in the market as regards to the interest rate decision coming up next week, as major key players are actually caught in a limbo right now, as we really don't know what will be coming up next week. And as a result of this, majority are looking forward to a significant catalyst that will be driving price movement. So as a result of this, we want to be looking at what we going to be looking forward to today. And you know how we do it. We are going to be focusing on high impact event. But when I did, there was no high impact event that will be affecting any of the instruments that we are monitoring for today. So what I did instead was to include the medium impact event by filtering out And I was able to see the good and services trade balance, which is coming from the US docket. This is a very, very high, very, very important event that we also want to take note of. And this is coming up in about an hour or two from now. So this was released by the Bureau of Economic Analysis and the US Census Bureau. And it is a balance between the export and the imports of total goods and services. So it's an event that generates some volatility for the US dollar. So we want to look forward to what the actual data is going to be like for today. And from the previous data we have here, we have minus $64.2 billion, and we have a consensus projection of minus 75.2 billion. So there is a level of contraction there, where majority are thinking that things might not be as rosy as the previous month. So we are going to be looking forward to what the actual data is going to be like, and if it's going to be beyond expectation, below expectation, or just as expected. But one thing we are going to be doing here is to try to sniff the chart to look at the underlying psychological movement of price action to identify potential trading opportunity for today. Then another high impact event that is coming in much more later in the day is coming from the Japanese economic docket, and that is the gross domestic product. And you all know how important the gross domestic product is. It shows us the monetary value of all the goods, services, and structures produced within the Japanese economy. And it also lets us know how it also helps us to measure the market activity and indicates the pace at which the Japanese economy is growing or decreasing. And with the previous data we have here, we have a 0.4%, and majority consensus here is projecting 0.5%. So there's majority are thinking that there is some level of growth to the Japanese economy. So we are going to be looking forward to that one, but that will be monitored against tomorrow morning, because this is coming up much more later today. So with that being said here, and with the information we have gathered here, let's dive right into the chart. And as usual, the first commodity we are going to be taking this morning is going to be the US oil spot. Now on the US oil spot, looking at the chart from an holistic point of view, so this is the 1 hour time frame, and looking at this from an holistic standpoint, you would realize that price action has been on a bearish momentum. And at the beginning of the week, we initially acknowledged that price action was a little bit caught within a range, where we saw how price action was trading between the $73.40 and the $72.50 area, giving us a simple flat channel to work with for the week. And you know how we do it whenever we have this kind of simple flat channel. We want to wait for price action to either break out of the resistant line of the channel to give us an opportunity to buy, or break down the support line to give us an opportunity to sell. And in fact, a couple of hours into the New York session on Monday, we actually saw our buy position triggered, but didn't last long, as we were taken out. I think we were taken out in a loss on that one, as price action dropped to the downside, breaking down the support line to trigger our sell stop order, giving us our first sell position for the week. And price action went on to break down the key level, which is at the $72 area. Remember, we had a key level at the beginning of the week. And for those who are not part of the beginning of this week with us, don't worry, I'm going to be explaining it to you in a moment, how we got to identify this level and how this level was supposed to be our guide for trading activity for this week. So we are going to be talking about that in a moment when I'm through with what the week looked like for us so far. So we had the privilege of being part of this bearish momentum. The first position moved over 200 pips in our favor, and the second position moved over 170 pips in our favor. So the first half of the week has been quite profitable for us. And during the live session yesterday, I told us all that for those who had missed out on this bearish momentum that we have been enjoying since the beginning of the week, there is a likelihood that price action could come back and retest our key level at the $72 area to incite another wave of bearish momentum. And this was exactly what happened. A little bit into the later part of the New York session yesterday, we saw price action come back and gave us multiple retests of the key level to incite a bearish move. And as you can see, price action moved about close to 100 pips in our favor before this engulfing bullish candle came in. And you know how we do it. Whenever price action moves significantly well in our favor, the next thing you want to be doing is to move your stop losses to secure your position. And if you had done that correctly, you would have been taken out of that second sell position in a small profit, or at a worst case scenario, break even. Now, with the situation we have right now, what is going to be our plans as we get prepared for the New York session today? Well, looking at the 1 hour time frame here, it is quite obvious that price action seems a little bit bearish since the beginning of this week. And to further emphasize the level of bearish momentum in this market, we were able to connect the series of lower highs to give us this bearish trend line, which has been supporting that momentum. And one thing happened a couple of hours ago, very interesting thing happened. We saw an engulfing candle breaking out of that trend line to signal that the trend line may no longer have the capacity to continue to negate the bullish attempt. And in addition to this bullish engulfing candle that broke out of this trend line is the fact that price action had found a higher low in this market. So let's look at this closely. So the first time price action will drop, the lowest point price action has ever been this week is at the $70.20 area. And one thing we noticed, as soon as price action got into that level, we saw an engulfing bullish candle, which you can see here, taking us out of that level. That was the first sign that we saw that a bullish momentum might likely be coming in. Then later on the New York session yesterday, we saw another huge engulfing candle bringing price back into the key level here at the $72 area, giving us some selling pressure around that area. And now we are seeing another bullish engulfing candle springing out and breaking out of that bearish trend line at this point. And in addition to that is the fact that price was unable to break the previous low, hereby giving us a higher low at the $71 area. And you all know what we look out for whenever we start seeing higher lows. It is a signal that a bullish momentum is gradually gaining momentum. So as a result of this, we have no other choice than to look out for buying opportunity at this point. Now, in order to support our bullish expectations from this current level, I was able to identify a bearish trend line after connecting the series of higher lows, since now we have a higher low now. So going forward from this current juncture in this market, this trend line we just identified is going to be serving as our yardstick to guide any trading activity going forward. And what this simply means here is that as long as price action remains above this bullish trend line, we would have no other choice than to look out for buying opportunity, while we also feel comfortable in whatever buy position we have here. And only if price action breaches this bullish trend line that we can start considering selling the US oil spot at this point. And with the look of things right now, things are very bullish at this point. And I do hope you had the privilege of joining this bullish momentum as we saw price action break out of the key level at the $72 area. So if you had been with me on this platform, you would realize I always mention how important our key level is as to guiding our trading activity. So if price action remains above our key level, obviously we want to be looking out for buying opportunities on our lower time frame to be part of a bullish momentum. And if price action drops below our key level, then we have no other choice than to look out for selling opportunities. Now that we have a breakout of this key level at the $72 area, we have a buy position triggered, and for those who are on standby to take advantage of this opportunity, well done to you for being on standby to catch this move, as you will be currently running with roughly 50 pips in profit at this point. And if you had been in this position, the next thing you want to be doing is to move in all stop losses to our entry point to have a worst case scenario break even if price action drops further back to the downside. So at this point, congratulations to everyone who has been part of this move, and for those who had missed out on this opportunity, well, we also have another structural gain at the $72.50 area, where a breakout of the structure will also be welcoming more opportunities to buy. So we are going to look out for more opportunities at the breakout of the $72.50 area. And one thing I would like to mention here is that as for the fact that price action has broken out of our key level, we want to continue to look out for more buying opportunities. But one thing I would like to state here is that there is still a possibility that price action could still drop back into the trend line at any point in time to incite another wave of bullish momentum. So we want to keep this in mind too while we continue to monitor price action here. So if price action climbs up and goes all the way up and it starts dropping at one point, we don't want to get worried or panic about that, as we have a bust stop along the bullish trend line, which we are also going to be using to guide further trading, further buying opportunities in this market. So let's keep this in mind while we monitor price action from this structure. And another thing I would like to state here is that price being above the $72 area confirms that price is back within the buyer's territory. Remember, at the beginning of the week, this area above the $72 area was serving as a strong demand zone in this market after that bullish gap happened. So if I extend this out a little bit, you will see that we are within the buyer's territory. So let's feel comfortable in our buy position here while we look out for more opportunities to buy the US oil spot. Now, in as much as we're looking out for buying opportunity, you know how we do it here. We also want to ensure that we keep open the option that sellers could still take over this market. Remember, since the beginning of this week, it has been looking bearish. So in order to take advantage of a bearish momentum from the structure, what do we want to see on this chart that will make us change our bias from bullish to bearish? Well, the only thing that we want to see here to sell the US oil spot is to see price action breach this bullish trend line. So if price action breaks down this bullish trend line at any point in time, then we want to start considering selling. And if we are going to sell, remember, we want to wait for confirmations to happen, like a breakdown, retest of the trend line, or the retest of the key level at the $72 area, where continued selling pressure below the structure will definitely confirm that sellers are still very present at this point. And if this happens, we have key structures like the $71 area, where the breakdown of that level will welcome more opportunities, and a further breakdown of the $70.20 area will also welcome more opportunities to sell. So let's keep this in mind. Let's mark this out on our chart. And if you don't mind, you can screenshot my screen so that you can use it as a reference point when you're about to make your independent decision. So these are my views here on the US oil spot for today. If you have any questions, feel free to let me know in the comment section. So that is that on the US oil spot. So I will be checking the comment section for the next 10 to 15 seconds to see if there are any questions, and if there are none, I will just move on to the next option. So I can see 68603, good morning to you, glad to have you around. Okay, I see Dino, good morning to you. 4419, good morning to you. Hameloro 716, good morning to you, and thank you very much for wishing us luck out here. We also wish you luck too out there. All right, so in the absence of no questions, I want to assume that we are all on the same page here, so I will be moving on to the next option. So the next option we are going to be looking at this morning is going to be the USTech100. Now, on the USTech100 market, things has been a little bit choppy in the last 48 or 60 hours now, since the beginning of the week actually. And we have seen, though we had the privilege of being part of a bullish momentum at the beginning of the week. But let's quickly run through the structures that actually supported the idea of buying at the beginning of the week. So what we saw here was price action started the week on a bearish note actually. So we saw price started the week at around the 14,550 level. Price dropped into the key level at the 14,500 area, where we begin to see buy pressure resume around that level. And this gave us a flat channel to work with for the week, where we saw price ranging between the 14,485 and the 14,550 to signal an indecision at the beginning of the week. And you know how we do it whenever we have this kind of simple flat channel. We want to wait patiently for a signal to come in, which obviously will come in the form of either a breakdown of the support line of the channel to give us an opportunity to sell, or the breakout of the resistance line of the channel to give us an opportunity to buy. And with our buy stop order sitting above the 14,550, we had our first buy position for the week just a couple of hours into the New York session on Monday. And then we also had the privilege of adding more position at the breakout of the 14,600. So as at Monday's trading session, we were already profitable on the US Tech, as we saw the first position run over 120 pips in our favor, and the second position ran over 70 pips in our favor before we saw this bearish momentum, bringing price crashing all the way down back into that range that we identified at the beginning of the week. And if you know how we do it here, whenever price action moves significantly well in our favor, we always move our stop losses to secure our current position. And if you had done that, you would have been taken out with a small profit before the crash took out all the buy position. And since yesterday, we have seen a situation here where price action has been caught within this range between the 14,600 and the 14,485 to emphasize the level of indecision in this market. And like I said earlier at the beginning of the session, that majority are still very uncertain of what could likely happen, and as a result of the interest rate decision, and then a couple of other factors like the US debt ceiling and the likes have been affecting this market and giving us a situation where majority are just waiting for a catalyst that will help drive price movement so that we can hop in to be part of that move. And you don't know how we do it whenever we have this kind of flat channel like this. We want to remain very patient, waiting for structures to mature before we want to jump into any position here. And if we look at this from a technical standpoint, we can only buy if price action breaks out of that resistance line at the 14,600 to join a bullish momentum to the upside, or sell if price action drops below the 14,485 to the downside. However, if we are going to look at the distance between price action and the resistance line, we have about 50 pips on that one, and if we look at it to the downside, we have also about 70 pips. So the next question you are going to be asking now is that, are we going to miss out on all this 50-70 pips move before we can actually take advantage of an opportunity, or is there a way that we can maximize the potential of any bearish or bullish momentum anywhere around the 14,550 so that we can join a position early enough? But before we go into the details on how to maximize that, I want us to scale up into a much more higher time frame so that we can see things from an holistic point of view and relate the structure on the higher time frame with what we have on the 1 hour time frame to make a well-informed decision. So in order to do this, I'm going to be scaling up into the 4 hours time frame right now. And on the 4 hours time frame, this was what we were able to spot here at the beginning of the week. And what we did at the beginning of the week was to take into consideration price action activity since the beginning of the month of May. And if we do that correctly, this was what we were able to spot, connecting the series of higher highs and the series of higher lows. We were able to identify an ascending channel which has been guiding and supporting this momentum in the last 6 to 7 weeks. And something interesting happened in this market when we zoom into what has been happening here in the last couple of weeks. You would notice that as soon as price action tested the resistant line of this ascending channel, we have been seeing continued selling pressure, negating all attempt by the buyers to break out of that structure. Then in addition to that observation, we had a key level sitting at the 14,500, a level which has been a major determinant of price action since the beginning of this month. Now, if we look at what happened on the last day, trading day of last month, we saw how the 14,500 was serving as a strong selling niche. Let me zoom things out a little bit so that we can see things clearly. So we saw how the 14,500 was serving as a strong selling niche on the last trading day of last month, before we saw the breakout of the structure last week Friday to incite a bullish momentum. And since price action broke out of that 14,500, we have seen how that level had become a platform for buying opportunities. As you can see, all attempt by the sellers to break down the structure since the beginning of this month has been met with strong resistance from the buyers, negating their attempt. And at this point in time, the 14,500 is reasonable to call it a demand zone at this point. So as long as price action remains above our key level at the 14,500, obviously we want to be looking out for buying opportunity. And the only way we can start considering selling the USTech100 is to see price action drop below the 14,500, if possible retest the structure to incite a wave back into the support line of the whole ascending channel we identified earlier, which also shares a confluence with the 14,250. But since price remains above the key level, then we have no other business looking out for selling opportunities. So what we are going to be doing right now is to see how we can maximize the bullish momentum as long as price action remains above the 14,500. Now, to do this, we want to scale down into a much more lower time frame, and so we shall be scaling down into the 1 hour time frame, where we want to look out for structures, patterns that will support the idea of buying the USTech100. Now we are back on the 1 hour time frame, and don't forget that we have a range where we identified at the beginning of the week between the 4,550 and the 4,485. So for me personally, anything above the resistance line of that range seems most appropriate to trigger a buy position at this point. Then another thing I would like to do here is to readjust this trend line so that it can capture the new structures we have here. So I would like to bring out my line chart so that we can have specific points of connection. And if we do that correctly, we should have a trend line around this area, which we are going to be using to guide our trading activities going forward. So I've thickened it a little bit to emphasize its levels of importance at this point. So what this simply means is that as long as price action remains above this trend line, we shall feel comfortable in a buy position while we also look out for more opportunities to buy the USTech 100. So as you can see, since last week, we have seen our price action had consistently respected that trend line. And in the last couple of hours, we saw how buyers negated attempt by the sellers to break down that structure. So we have a linear trend line to work with, hereby giving us a yardstick to guide our trading activity for today. So as long as price remains above this trend line, we shall feel comfortable buying the USTech 100. So in that regard, let's have a buy stop order above the 14,550. Anywhere above the 14,550 seems most appropriate at this point, and then we continue to rather move all the way to the upside if price action also breaks out of the 14,600. And if this momentum continues, we also have a key level, which is the resistance line for at the 14,665. This is the highest point price action has been this year. So if price action gets into that area too as well, and it breaks out, retests that level, we have no other choice than to look out for more opportunities to buy the USTech 100. So this is how we are going to be buying the USTech 100 today. So let's keep in mind, let's be on standby to catch any of these opportunities for today. Now, in as much as we're looking out for buying opportunity, you know how I do it here. We always want to also keep the options open and look out for potentials that sellers could also take over this market. So if that is going to be the case, how do we intend to sell the USTech 100 today? So hold on a second. Give me a moment, please. Give me a moment, please. Give me a moment, please. All right, so we were talking about how to look out for selling opportunities here. So we already talked about how to buy. So we already agreed that anywhere above the trend line, above the 14,550, we buy, and we look out for more opportunities to maximize the potential of this bullish momentum. However, if we get to the point where price action breaks down that trend line, that is this bullish trend line we identified here, let me highlight it for you so that you can see. So if at any point in time we see price action breaks down this trend line, then this will be a sign that a trend line may no longer have the capacity to continue to negate the sell pressure in this market. And if this happens, remember, we are not getting too excited. If a breakdown of the trend line happens, we want to remain patient, and what we are going to be doing after the breakdown happens is to scale down into a much more lower time frame. It could be your 5 minutes, 10 minutes, or 15 minutes time frame. Look out for selling pressure. Look out for signs that buyers are finding it difficult to climb back above that trend line, and this would reflect on the chart as something like this: retest of structure, continued selling pressure around that area. Then at this point, we want to consider selling the USTech 100. Then with a sell stop order below our key level, we want to be adding more position as we ride that move all the way to the downside. So we have a very simple setup here on the USTech 100 to guide our trading activities going forward. So anywhere above the bullish trend line, the green thick bullish trend line on your screen is comfortable for us to buy the USTech100, and if at any point in time this trend line is breached to the downside, then at that point we want to start considering selling the USTech100. So it's a very simple setup. There's nothing too confusing about the setup, so let's just be on standby to catch any of this opportunity while we continue to monitor price action. If you have any questions whatsoever, feel free to let me know right in the comment section, and that is what I just want to say. I wish you best of luck on this one. So in the absence of no questions, I want to be moving on to the next pair, and on the next pair I want to see, I keep missing out on the sequence at which I treated the currency pairs for this week. Sincerely, I think this was as a result of the new currency pair we included, that is the EURUSD. But let me run through and see what the next pair is. I would like to follow with the sequence at which we started the week. So give me a moment, I should get that in a couple of seconds. So okay, so the next one we are going to be looking at right now is the GBPUSD. So on the GBPUSD, let's look at what is really going on in this market. The market has really been very choppy actually since the beginning of the last 48 hours or so. So this is the GBPUSD chart, 1 hour time frame, and the first thing I would like to acknowledge here is the key level. Very, very important. Remember, we identified a key level at the beginning of the week at exactly the 1.24400 level, and you know how we use our key level. Key level guides us. It helps us to position ourselves, and if price remains above our key level, definitely we want to be looking out for buying opportunities, and if price remains below the key level, we want to be looking out for selling opportunities. Now, beside the key level we identified here on the 1 hour time frame, we also had a flat channel where price action was initially choppy within 1.24590 and the 1.24250 level. And during the early hours of Monday, we had a sell position triggered, though this happened before the live session on Monday, and I told us on Monday that we might likely see price action come back to retest the structure to incite another wave of bearish momentum to the downside, and price could likely come into the 1.2425 or even go as far as our key level to incite the bearish move, and this was exactly what happened. We saw price action come into the structure, we saw a couple of rejections, price action transitioned into a reversal pattern, price dropped back below our key level to incite a sell move, and in fact we had price moved about, how many pips was that from the key level? We had it move about 50 pips in our favor, and after the breakdown here we had it move about 30 pips in our favor before this whole bullish momentum began. And for those who took advantage of these opportunities, I hope you are able to move your stop losses accordingly to secure the current position, and if you had done that, you will have been taken out with a small profit or at a worst case scenario break even. And one thing about this structure that might negate the idea of selling the GBPUSD for this week is the fact that since the beginning of this week, you would have noticed how price action had continued to find higher lows in this market. So this was the lowest point price action got to this week, around the 1.23850 level, and since then we saw how price action had found it difficult to find new lows and instead continue to find higher lows here. And whenever we see higher lows, what do you think is happening? Of course, we are seeing a situation where a bullish momentum is gradually coming in. And personally for me, when I saw this one, I shared this on my public platform. I said we are going to be getting ready to buy if price action breaks out of the 1.24250 level, and if it also breaks out of our key level at the 1.2440. We want to be adding more position, and if price action goes on to break out of the highest point it has ever been for this week at the 1.24590, then definitely we want to be adding more position. So at this point in time, personally, I have about 2 positions running in profit here. And for those who took advantage of this one, well done to you for being on standby. Well, at this point, you want to be moving your stop losses to your entry point around the key level. But if you had missed out on this opportunity, well, it's okay. We still have the privilege of being part of this position. So all we just need to do is remain patient and wait out for new structures to mature. Now, what structures are we going to be looking at from this current structure in this market? But before we go into the details on this one, I want us to scale up into the higher time frame. Let's look at things from an holistic perspective together, after which we come back here to make an informed decision. So when we scale up into the higher time frame, that is the 4 hours time frame, we begin to see things more clearly. So at the beginning of the week, this was what we saw on the GBPUSD after taking into consideration price action activity since the beginning of the month of May. We saw initially that price action was bearish. We had a couple of trend lines to emphasize the bearish momentum, but something interesting happened during the course of last week after citing a demand zone here around the 1.2330 area. We saw how price action broke out of that descending trend line for the first time in over 6 weeks. And with the breakdown of that breakout of that structure, it was a clear sign that the trend line may no longer be able to reject any bullish attempt in this market anymore. And this breakout also shares a confluence with the key level we identified at the 1.24400 level. And we saw how price action climbed to the upside and also respected our technical expectation, where a breakout of a key level like the trend line here also saw how price action came back to retest the trend line, hereby transitioning into something that looks like a reversal pattern in the form of a double bottom structure, which from a technical standpoint is a very, very strong reversal pattern. And whenever we start identifying the transition of price action into a potential reversal pattern, the next thing we want to be doing is to project a neckline, which we are going to be using to guide our trading activities going forward. And if you look at the structure here, we already had a neckline situated at the resistant line for the week, which was around this area. So remember, on the 1 hour time frame, we had a resistant line there. So that is going to be serving as our neckline for today, where a breakout of that structure will definitely be a very beautiful opportunity to join a move to the upside. So don't let us miss out on this opportunity at all. So as long as this situation goes on and price action continues to find higher lows at this point in time, we want to be having a buy stop order above our key level, that is the neckline there, to join a bullish momentum to the upside. Now I will show you that on the 1 hour time frame in a moment. Give me a moment, please. So let me hold on a second. This structure is quite simple and interesting, and we don't want to miss out on that opportunity if this higher low situation continues in that direction. Okay, so let's scale down to the 1 hour time frame now. And when we scale down into the 1 hour time frame, this is what you will be seeing here. So this is the resistant line. This is the neckline we identified earlier on the 4 hours time frame. So it falls around the 1.24590 level. So we want to have a buy stop order above that area. So this is for those who had missed out on the buy position we have been enjoying since the beginning of today. And for those who are already in the buy position, of course, this is another opportunity to maximize the potential of a bullish momentum to the upside. So that is how we are going to be buying the GBPUSD. So in the meantime, you could have your TP target at the 1.2550 level. So let's see how important this 1.2550 level is. And to do that, we want to scale up into the 4 hours time frame so that you can see how important that level is. It has been a strong selling niche in the past. We saw how it was a selling niche during the second week of the month of May. We saw it here. We saw the buy pressure around this area. We saw selling niche as well around this area during the last trading day of month of April. And we also saw what happened here last week, where selling pressure resumed from that area again. So that area now, if price action proceeds and continues into that level, depending on how price action reacts to the structure, will determine if we are going to be selling. That is, if we start seeing selling pressure below that structure, or are we going to be buying if we start seeing a breakout of that area. So this is how we are going to be taking advantage of a buy position on the GBPUSD for today. So on the GBPUSD, structures are screaming bullish right now. So we have no other choice than to look out for buying opportunity as long as price action remains above our key level situated at the 1.2440 level. Now, in as much as we're looking out for buying opportunities, no matter how interesting or how promising the structure is, we also want to consider the potentials the sellers have to as well, so that we can be as balanced as possible to take advantage of any opportunity here. So if we are going to be selling the GBPUSD today, the only thing that will happen here that will make us sell is to see price action breach this bullish trend line, which has been supporting this momentum since last week. And so a breakdown of that structure will be the only sign we are going to be looking out for to sell the GBPUSD. And remember, we are not getting too excited. We want to wait for price action to give us a confirmation in the form of a retest of structure on our lower time frame, continued selling pressure, giving us signs that buyers are finding it difficult to climb back above the trend line. Then at this point, we want to start considering selling the GBPUSD. So let's be on standby to catch this opportunity. And that is that on the GBPUSD. If you have any questions whatsoever, feel free to let me know in the comment section. Okay, I can see your comment. Nest57, hi, how are you doing today? Aki88, good morning to you. I'm glad to have you around. I see you often these days. Trust you are doing well. Art Style, good morning. I like that name, Art Style. Okay. Nova, good morning to you too. All right, everyone. So in the absence of no questions on the GBPUSD, I want to assume that we're on the same page. So I will be moving on to the next instrument for today, which is going to be the XAUUSD, the gold commodity. And let's look at what has been going on this chart since the beginning of this week. So we are going to be scaling down into the 1 hour time frame. So let's look at the 1 hour time frame on the XAUUSD. So here we are on the 1 hour time frame. And one thing we've got to understand on this chart on the 1 hour time frame since the beginning of the week, remember we bought the gold that was on Monday. We bought the gold on Monday. So this was what we saw at the beginning of the week. We saw this channel where price was initially ranging between the 1,950 and the 1,944.20. And then during our live session on Monday, we acknowledged this continued buy pressure around this area, which later transitioned into a reversal pattern. And we said here that we are going to be positioning ourselves just right above the $1,944.20 level to be part of a bullish momentum. And this is exactly what happened. We saw price action break out of the 1,944, triggering our first buy position for the week. And we rode the move all the way to the upside. And along the line, we had key structures like the 1,950 broken, giving us more opportunity to maximize the bullish momentum. And we also had the breakout of the key level, had the 1,955 to maximize for the bullish momentum. So during the first day of this week, we were able to scoop, okay, the first position move over 200 pips before the sell pressure began. Then we had the second position here move over 140 pips, and the third position at the breakout of the key level moved over 75 pips. So it was quite a very profitable trade for us at the beginning of the week. So for those who are part of this bullish momentum, well done to you guys for being on standby to have caught that move. Now, since price action got into that area around the $1,966.30 area, one thing significant has been happening around this area. We have seen selling pressure around that area here by transitioning into a choppy situation where price action has since been ranging between the $1,966.30 level and our key level at the $1,955 area to give us an insight into the level of indecision in this market. So it is quite obvious that participants in this market are very indecisive, caught in a limbo, waiting for a catalyst to give a signal of where price action is likely going to be going. And as a result of this, we all know how we do it whenever we have this kind of flat channel. We want to remain patient and wait consciously for a signal to happen before we want to be joining. And with this kind of situation here, we will rather wait for either a breakout of the resistance line to give us an opportunity to buy the XAUUSD, or the breakdown of the support line, which also lines up with our key level at the 1,955 to join a selling opportunities in this market. So at this point, we just want to remain patient here and wait for structures to mature before we want to be joining any potential move. Now, buying the XAUUSD looks more reasonable if price action breaks out of this 1,966. And if you look at what has been happening in this market around this area since Tuesday, you will see how this level, how this zone has been a strong selling niche. So every attempt by the buyers, despite the strong bullish start to the week, every attempt by the buyers to break out the zone has been met with strong resistance from the sellers. So we want to keep that in mind. So if we are going to be buying, then we want to see price action take out all the sell positions around this area, give us some liquidity, which would obviously reflect on the chart as a retest of structure to incite another wave of bullish momentum. So that is how we are going to be buying the XAUUSD for today. Now, in as much as we are looking out for buying opportunity above the 1,966, is there a possibility that we can actually maximize the fact that the area between the 1,966 and the 1,963 has been a strong selling niche? Well, at this point, if you are a scalper, probably a short-term trader, you might want to capture this move, hoping that price action will drop again into this area, giving you about 70 pips. But personally, for me, I would rather see price action break down the 1,955, retest of the structure to give me an opportunity to sell. So this is what I'm going to be looking at on the XAUUSD today. So we have a simple flat channel already, where price is ranging between the 1,966 and the 1,955. So we obviously want to wait for either a breakout or breakdown of this range to give us an opportunity to buy or sell. Now, another thing I would like to emphasize here is that we acknowledge on the higher time frame that price action has been bearish, remember. So let's go into the 4 hours time frame here and look at things from an holistic point of view. And this is what we saw at the beginning of the week. We identified a bearish trend line after connecting the series of lower highs to give us the simple guide that guided the bearish momentum to the downside. But the fact that price action was unable to find a lower low, as you can see how the 1,940 has been negating the bearish attempt, we started considering buying the XAUUSD, and that gave us the idea of buying at the beginning of the week, giving us that profit we had here. Now, the situation now looks very interesting as price action right now has been trading along the bearish trend line in the last 24 hours, choppy situation around that area, further emphasizing how important that area is. So at this point in time, anything could happen. Price action could respect the bearish trend line and incite another wave of bearish momentum to the downside, or it could break out of the trend line to to give us a sign that the trend line may no longer have the capacity to continue to negate the bullish attempt. And in fact, I think that if price action breaks above the trend line, it's very likely that we have a massive move to the upside. So we want to be on standby to catch that move too as well. So that is how things are looking from an holistic point of view. And as a result of that, we have that simple setup here between the 1,966 and the 1,955, using this as a yardstick to guide our trading activity for today. So let's be on standby to catch that one. Mark this out on your charts, screenshot my screen if you want to, so that you can find something to use as a reference point when you're about to make your independent decision. So that is that on the XAUUSD for today. So let's move on to the last pair for today, which is the EURUSD. This instrument was introduced to us by someone in the house here. And let's run through what has been going on in this market. So the first thing we did here on the 1 hour time frame was to acknowledge our key level, which is sitting at the 1.06900 level, and we agreed here on Monday that as long as price action remains above our key level, we definitely want to be looking out for buying opportunity. And it's until price breaks down the key level that we want to start considering selling the EURUSD at all. Though we had some situations here where price action broke down the key level, giving us some sell signals. As you can see, we saw one happen here on Monday, just right into the New York session. We saw price move about how many pips here? About 20 pips. And I hope you moved your stop loss. If you had done that, you will have been taken out in a worst case scenario, break even. Then we also saw another scenario here yesterday after our live session. We saw our price action dropped again below the key level, moving about another 23 pips in profit before we saw price move against us again. And I do hope you moved your stop losses accordingly. Now you can see how this 1.0690 area has been a strong niche for buying power in this market, negating all attempt by the sellers to break through the structure. So as a result of this, I want to acknowledge this area as a potential demand zone for the second half of this week. So let us label this area for the sake of clarity. So we have this area named demand zone, situated around what? Okay, 1.06750 seems most appropriate. 1.06750 level. Okay, so I give this a white color and then bolden this one a little bit so that we can see things more clearly. So I'll place this right inside the box. Here we go. So we have a demand zone right now, which for me is quite reasonable at this point. And for the fact that price action broke out of our key level here at the 1.06900 level, I do hope you are able to take advantage of that opportunity, as we already agreed that we are going to be buying anything above that key level. And if you have done that correctly, you will currently be running with over 25 pips in profit. And since price has moved significantly well in our favor, the next thing you want to be doing right now is to move your stop losses to secure this current position. And personally for me, I will be suggesting that anywhere right below this level at the 1.07050 level seems most appropriate to move all stop losses to, while we continue to monitor price action and wait for another breakout of the 1.07250, which will definitely signal a very strong bullish move, as a breakout of the 1.07250 will be the first time price action will be breaking out of this level this week. And for me, if the breakout happens, this might likely incite a very strong bullish move to the upside. So let's keep this in mind while we continue to monitor price action. Mark this out on your chart. Look out for more buying opportunity above that structures. And for those who have missed out on these opportunities that we have here this morning, well, I would advise you to remain patient here. There are two things that could happen here. First of all, we want to wait for structures to mature, like a trend continuation pattern to evolve, and this might reflect on the chart as price action retracing back into the structure or the key level. But one important thing we are going to be looking out for around this levels or zone is reversal patterns like double bottom structure, head and shoulder patterns, falling wedge, whichever case it may be, to join or add more position to our existing trade. However, if that does not happen and price action continues to go to the upside, then a buy stop order above the 1.07250, that is for those who are already in an existing trade here. But if you don't have a position yet, I might suggest that you wait for a retest of structure. So as soon as we have a breakout, you scale down into your lower time frame. It could be your 3 minute, 2 minutes, 5 minutes time frame. Look out for retest of structure to join that bullish move to the upside. And you might be asking me, why have I said for those who have an existing position to have a buy stop order? The reason why I have said that for existing position holders is simply because they are already in profit and they can afford to risk or leverage on the profits they've made so far to test waters around the 1.07250 and see if the breakout of that structure is going to work. So that is why I have said that for those who already have a buy position, you could have a buy stop order above that structure to risk out of your unrealized profit or profit you've made so far from this buy position above the key level. So that is that on the EURUSD for today. It has been a wonderful moment, and in fact we have simple and interesting setups that we are looking forward to maximize during the New York session today. I hope you have found this session insightful, and for those who are joining us for the first time, I hope you are able to gain 1 or 2 things from this session. And trust me, the more time you spend with us, the more you get to understand how this works, and with time you'll be able to use the information you have gathered here to make your independent decisions on your own portfolio. I can see Steamroller in the house. Good morning, Steamroller. How are you doing today? Glad to hear from you after over a week now since we spoke. Okay, you're on vacation. Wow, that's interesting. Trust you're having fun out there. Wondering if you could look at USD SEC in your free time and perhaps incorporate it into next week's live session if you think there can be some nice setups. Okay, USD SEC, well, I will look at it. But one thing about those kind of market environments is the fact that it has is a very volatile market, of course, and it has a tendency of key players influencing that market unnecessarily. So if you are going to be trading that market, you want to be trading the USD SEC on a much more higher time frame so that you can feel comfortable in whatever position you are. So I will take that into consideration and keep reminding me so that I can remember to look at it and see if I can bring something up for us here next week. All right, thank you very much, Steamroller. Okay, 8671, hello to you. How are you doing? I'm glad to have you around. Okay, Steamroller, you're welcome. So in the absence of no questions, okay, Steamroller. All right, so in the absence of no questions, I want to call it a day here. It has been a wonderful moment, and I hope to see you same time tomorrow, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review how well the instrument we have been monitoring so far this week has been doing, while we also get prepared for the New York session tomorrow. Do have a wonderful and beautiful evening, everyone. Bye-bye.